Good morning, traders. It's Perry Wilkie with StartupTrading.com. It is 8 minutes till 9 a.m. Eastern Time on Wednesday, March 26th. Man, has this month flown by. Only a few days left. We'll get into that more on the positioning. So, as we look at, I didn't even, if you were watching the tape and no one told you what the news schedule was, you couldn't even tell that durable goods printed this morning. That's how whatever it was, no one really gave a rat's ass. So as we look at the rest of the day, there's really nothing going on, right? We have Kashkari. It's going to be on at 10 with audience questions expected at Fed Listens in Detroit. And then we're going to have Muslim, I guess it is, uh, on talking about the U.S. economy and monetary policy in St. Louis at 110 with more audience questions expected. Now, the audience questions expected I highlight because usually the whatever they're going to speak about is just like is watching paint dry for the most part, unless it's Powell, and then because it's just an algo party. But the audience questions expected, right? Depending on the mood of the speaker, they could get something off the wall, answer it off the wall, and that can really move the market. So those audience questions expected, I highlight them just to let you know that there could be, something, if you see the tape moving dramatically, you should check the news feed up there on Jack's Discord, and then see if someone uttered something that freaked the market. Then you can decide whether you want to fade it or uh, go with it on the next retracement that direction. For the rest of the week, we're going to have final GDP tomorrow, which is not really a big news event either, unless from the preliminary to the final, it was a big shift. And then Friday, we're going to have core PCE. That can actually be like a three-star event. So we'll just have to watch that one. But that's one you definitely want to be flat before, and it wouldn't hurt to be flat before the one tomorrow morning either. I don't think it's going to be like durable goods where you won't even at least see it on the tape. Uh, and then, so I think we beat that up. As far as earnings go, really nothing unless you're into yoga pants tonight after the bell. Um, and then we've got these XS and A lines. Um, so I talked about, because we had that 10-day balance below us, right? And we've had, whether you counted Friday as an up day or not, definitely Monday was. And then we're coming into yesterday, Tuesday, right? I said, this is the marker that I really wanted to see tested. We couldn't even get down to those markers, right? Nowhere close. Couldn't even get into value on the NASDAQ. Barely got into it on the ES and a little deeper on the Dow. So yesterday, basically, didn't even trade down to 490 in the cash session for the Qs, right? Got almost up to 494. So we were really spent the majority of the time between 491 and 493, which is about an 80-point range, and you could say 100, but if you go from 491 to 492 half, and then leave it there. But for the cash market, right, didn't trade down to 57.50. Basically, was at 57.60 up to 57. Let's call it 85, and then that was it for that. And then looking at the Qs, 574 to 570, or not the Qs, the SPY, sorry, 574 to 576. That's a 20-point ES range, right? These ranges really contracted yesterday, once again, which is, that step over into. We've been in negative gamma for 5-6 weeks now. We're kind of creeping into positive gamma. That's what shrinks the volatility on the positioning, and then we could get rejected to go back into negative gamma, go back lower again, but odds are that we just kind of meander very slowly higher, and that's what I'm looking at. So we got a good marker. We had salmon run trades go off in the Nasdaq last night, 20,500 basically up to 20,525, and then you know there was no other poor structure on any of these charts from yesterday's session. So let's look at that positioning now. And again, today's Wednesday, so we got Wednesday, Thursday, and Friday of this week. Friday's usually a little mini OPEX, right? But Monday is the end of the quarter, and that is a large. It's not as big as it can be bigger than the monthly expirations, to be honest with you, but it's not as big as the quarterly expirations, and it's definitely bigger than the weekly expirations, generally speaking, because they've been on the books for a long time. With all that said, let's start off with the SPX. And I had you mark on your charts uh, 55.65, right? That's we're 210 points above that at yesterday's close, right? We just ran away from that. So that's for Wednesday. So on any huge weakness, right? That's where the draw is going to be. If we get, a massive, reversal from here, we could definitely take those 210 points out and go right back down there again. If we look at it, that is right here, this 55.65. That's going to be your target on severe weakness. I'm not expecting severe weakness, right? But if you see it on the tape, if you see the VIX start getting bid, you see us one time framing lower, and just most of the sessions in a diver down, we could definitely hit that by Monday if those conditions present themselves. My guess is that those conditions do not present themselves, but you have to be aware of that, don't get too cocky if you see the tape changing, because that's where it's going. Otherwise, if we look at it, there's not a lot of markers to the upside. So the cash market closed at 50, let's just call it 57.75 yesterday. You can see 5,800 is a magnet, so that would be 25 points above yesterday's close. Right now, we're basically unchanged on the ES. And then you can see that we've even got a little bit more gamma building at 58.50 for this week. So we could definitely, and you can see some of that gamma is today. We got 10,246 up there, and then at 58.65 we got another 10,386. So that is really, where we would go to the upside. That should be your limit. So you're not looking for anything above 5850, and that's if we can make progress above 5800. That's where you should call it a day if you got long into that. And we'll just have to see how it reacts up if we can even get above 5800. I'm not even saying that's on the table or guaranteed, but that's the little flow that you would need. Um, and then looking at the SPY is currently trading 575.72, so it's a little bit above 575. So you can see that the bears, right, all these puts for the week are basically underwater. They're worthless at this point in time. So that can give fuel to go up. So we could get up to 580. That would be basically about 42 points above where we're trading right now on the ES. So that would, let's just say that would put you right around 58.71. Let's just round that off. So 58.71 on the ES is right around where this is going to be at. Uh, and then we can look to see what's going to happen after that. You can see for today we could potentially get another 20 points above there up to 582. That would be a slow grinding churn, and the VIX would really have to be staying at or near the lows of the session for that to happen. On the downside, 570 is what you would be looking at, so that would be basically around 55 56 points under where we're trading right now on the ES. That would take you basically, let's just call it down to 57.70. 57.72, 57.73, right around in there is where that would take you on the ES. And then looking at the Qs are currently trading 493. And you can see 502 for the week has got the biggest gamma. That is your ceiling for the week right now until proven otherwise. You got 30,696 calls up there right now for 502. And of course, you can understand that 500 will be the lid. And for today, that appears like it should be the lid, 500. So fair value, uh, if we're just going to chop around, retrace back in yesterday's feel good pocket, I would say 490 to 495 would be really where you get. I don't think you can make any traction below 490 unless the VIX is just really getting a bid and holding near the highs. Then you could potentially slide down to 585. That would be a pretty decent move down from where we are at this point in time. But more than likely, we'll hit 595 to make a decision whether we want to go towards 500 today or not. You can see we could probably stop around 498.75, 499, and just keep that 500 a little bit out of reach for today. Uh, I think we beat up positioning, so let's move on. Uh, we have again on this continuous contract, it really does not do the picture justice. But what you really want to watch is Monday's low, right below Monday's low. That's your, just draw a big fat line on that going forward. That's going to start taking you towards that 10-day balance lower if we can breach into that. Otherwise, I would assume watching Jack and his sequencing. Um, he might have an extension from somewhere in this 10-day balance up to the high. We'll have to watch. I missed yesterday, so as we look at that, you really don't want to participate unless you're doing it on bated breath with some really tight brackets, and you only got to try it once, at the most twice, to buy anything if we get under 57.75 half until you see structure forming down there. You just don't want to blind limit anything more than once. Like I said, possibly twice, but you're probably just going to regret life if you do it until you see that structure form. And that's if we ever even this skipped point of control at 57.75 half, that could stay on the board for a year. We have no idea frickin' telling right now. I'm just telling you that below there, you want to be very cautious with trying to do anything long. It doesn't mean you need to be short. You can sit on hands, watch the price action or whatever, but you definitely don't want to be, blind limiting longs. Looking at, where we could go now, the next target up above is 58.51 half, or 58.51, excuse me, and that's going to go back to March 5th. So we haven't even got it out of March yet. So if you look at, where we started March from, uh, basically we ended and started March right at, let's just call it 58.80. Wouldn't it be kind of funny if that's where we ended March on Monday? Uh, totally on the table. And then we'll see what April brings, right? So those are your bogey lines. Again, I would expect some more tightness again today until proven otherwise. Um, and this is the specific contracts is really what shows you those 10-day balances below. These lines, I really should get rid of them. I'm going to keep them on until we trade back down to the area one more time. And if we don't, I'll leave them on there for a while. But I want to see if there is actually reactions at those if we do trade lower before we. That would be above the middle of that 10-day balance, which would be a normal bid point if we do it, where you could see structure change if we get down there. But to be honest with you, if you look how we streaked lower coming down here after having this 10-day bonds, we should just streak higher again, and we should get up towards this 21,350 area. We should get up towards this 6,053 area, and we'll just have to watch, right? What we're watching is a previous day's low to be traded under and a close under, right, to put it in a swing high. There's lots of places where that could happen, but you're just guessing at this point until you see it happen. Uh, that it is going to happen because we could potentially even go up and take out these all-time highs. We just don't know. We just have to watch the structure. Luckily for us, we're just day traders, and except for some of us that put a little bit of 3-year money to work last Friday, there's really nothing to do except for day trade this at this point in time. Overnight action, 23 points on the ES. And if we look left on our chart, right, we can see just how many bears are trapped short. So basically, I always like to look left at the chart, see when the last time that someone could have been to the other side and right. So you've got to go back now to basically March 6th is where we are at this point in time. To March 5th and 6th is really where you're at this point in time on the structure. So again, we should have no business, right? If we're going to continue the selling and the bears have their way and get a little bit of rescue mission going down, this is still my area that on the day frame that I don't want to. I shouldn't use the word day frame because that's Jack's indicator. On daily day trading for the session, I don't want to uh, take any bids or look for anything until the next session below 20,275 and below 57.94 half. It doesn't mean that I'm going to be short. It just means that if we're down under there, I'm not going to be looking for any longs until I see structure change. And even if I see it, I'm not taking the trade until the following session. I won't look long down there. So what should happen, right? We had those saber run trades last night. Uh, we should stay under that. We should close and we should test yesterday's low, right? But what I always say is, what should happen doesn't happen, the opposite is going to happen with equal magnitude and force, meaning that we're going to probably trade up to 20,600 today. That's what I would look is, getting up towards that level. And keep in mind some of the positioning areas that I gave you earlier. You'll have to watch those in tandem. Once the market opens, you'll have some markers at the top of the screen that you can look at as well on the 8 grid. I hope this helps. We'll see what Jack's looking at, and I'll talk to you tomorrow.